Good evening. Ira Epstein of Linn Associates with your SPDR ETF video, and it's for a wild trading day on Tuesday, the 23rd of February, 2021. So wild, my day began off crazy. I came down, I get up my normal way to do it, walk in the basement, we got water everywhere. Apparently a pipe blew somewhere and we had to fix our home. I never got to putting out my morning flash video, so I apologize for that. And I was even late on my other stuff. I'd made time to put out my morning regular video and the voice didn't sync properly with the audio video part. I had to redo it. It was not a good morning for that. It was a good morning in way of trade calls. That I was happy with. All right. So where are we? Well, AMC up. Interesting. Just reading in the town of Evanston, it's right outside of Chicago. It's where Northwestern University is, the Big Ten. The last movie theater in a big college community in Chicago, a major community, is closing. Cinemark. I don't think they have any movie theaters left there now. Wow. That was fascinating to me. A sign of the times. The kids, when they are in school, probably not spending the money it costs to go to a movie any longer. They find they can do it in a dorm room, wherever, and split it between them. Wow. GME, still down, but off the lows nicely. And THCX, still getting a correction. Now, the stock indices came roaring back after deep breaks. If you're a morning subscriber of mine, I was literally telling you this morning, I think this break early on is where you've got to be what? Looking for the shorts in the market to cover. Why? Because we were at major numbers. Let's get to them and you'll see. Doesn't mean I'm telling you what to do. I'm just telling you what I put out in my update that I can prove. All right. So this market's coming back up. We're still fighting in PAVE against these old highs, trying to figure out what to do there. Is the market trending? Well, here's what we can see. We know it's been coming up. And up here, 23.28 is the all-time high on this move. 23.14 is the recent high. We'll see if it can get through that. What's the pattern? We have a pattern of a higher high and a lower low. Now, this all changes if you take out 23.14, because that will give you higher lows and a higher high. Okay. What if it doesn't take that out and falls back? Well, you still have the higher high and lower low. No trend bias up. Where's the resistance? 23.37, the upper Bollinger Band. When we look at Bollinger Bands, we see this market, when it hits them, it does like to pay attention to them. So it's not one of these markets that doesn't. Most markets do pay attention, some better than others. So I would be looking, if it gets there, for some pros to be taking money off the table. What about the slow stochastic? Aha. So the slow stochastic has both numbers tonight over 80. Yesterday, both numbers, let's see if I can get this to do it, were over 80. That's Monday. And Friday's numbers were over 80. What about the day before? Not. So today you have an embedded reading. 3 days in a row qualifies for that. That tells me on pullbacks in the market until the red number closes under 80, what am I looking for? The pros to step in, buying this market, looking to try to come out at the upper Bollinger Band and just keep repeating that process, maybe holding on to positions or not. It's what I'm putting together right now for you in my enhanced Bollinger Band course that'll be ready shortly. I know you think I'm pitching everything, and you might be right. But if you want to learn that, it's the way you're going to do it. In THCX, I can't get away from, I had a client that wrote me, a subscriber. And as the market's falling, and I'm watching this, and he's writing me, I'm getting ready to pick up some of this. And I'm going to myself, I don't have a business where I write you back and say, I don't want you to do that. I'm not your broker. But if he's taken my course and everything, what do you see there that you're trying to buy? Because I don't see what you see. I see a market with lower highs. Let me just take you away from even this. And lower lows. You had a high, a lower high. So you stepped out of the uptrend at a minimum right here. This was not a buying opportunity lower. You had a low, higher low, but watch. As soon as you pull back that day, lower highs, higher low. You've paused. You have to get back over this number if you're going to tell me, hey, I want to be a buyer of the market. Didn't do that. Now you're going to say, well, I like that line in the sand, the 18-day average, and I'm going to go, why? You now have a pattern on this break that you're going to have, if I'm right here, this low of this day was 21.75, and right here it's 21.48. You still have the higher low, higher high. Momentum is pointing down. If you buy, where would your stop be? 21.47, but I don't know where you're buying. If you bought it, you got to be careful. Now you got to defend the market at 24.75, because otherwise the trend's down and you're looking for 21.28, and this is what the market did. So I saw what he was doing, but I didn't understand it. Momentum was down. That was going against him. It wasn't flat yet. Market pulling back. That's all, and that happens, okay? I cannot be your broker, all right? It's not what I do for a living. I'm a futures broker. I am not a stock broker. In SMH, I'm looking at this market, and here you've got lower highs, lower lows. What happened here? You've got your momentum turning down. You're not embedded. I don't want any part of trying to buy a market like that. I'll wait. Let it set itself up. It hasn't done so. Where did it go? Back to the 18-day average to fight a battle. If anything, with the settlement at 242.23, the pros are likely sellers at 242.74 with stops over 255.81, because the trend is down and the bias is down, and so is momentum trying to come out either at the Bollinger Band, or there's another product that I have for my subscribers called a window envelope. Rick Santelli on CNBC uses it. Sort of a whole host of other traders. If you watch Carson on CNBC, a lot of these men use it. And it's a deviation from the 18-day average. Finding what it is, that's the skill that you have to put in, because there's no book you go read. I have a way of doing it, and I publish these numbers intraday for my clients because I'm updating them all day long. And as I do it, it gives them a reason to be with my service. And there's another support number there. I show this all in my morning paid subscribers. In the industrial sector, trend up, embedded reading. What do you think I'd be telling you? You're sitting next to me. You want to be a buyer on the pullbacks. Until you lose that reading, you don't buy if you first make the higher high and then fall. A day like today is an opportunity. It doesn't mean I'm right in what I'm saying, but until it's proven wrong and you lose that reading, you can make a challenge to 92.74. In XLE, you're fully embedded. The only thing on my mind is being long. It's over the 18-day average. The swing line is up, but this rules the day. If that's staying embedded, I am bullish. QQQ. What do I say to you over and over on this? The first time you hit a Bollinger Band, what do I think the pros are doing? In unison, they're taking money off the table. You went down to it. Why are you hanging in there? Okay? I know you're going to tell me because it's going down here and here. So let's assume you're right. Did you take some money off the table and jam a stop all the way down on your remaining position? Or are you just sitting going, well, it's still going lower? I wish you the best. The odds of staying under this band or above it are 5% of the time. It generally works its way higher. It pushes on the band. You get two arms, you're pushing against the wall. That's how it moves the bands up and down. This thrust down, it's got a lot of work to do to keep working it lower. Think of it that way. It'll start making sense, I hope, to some of you. In the emerging markets, well, let's go over here. And I know this is a popular trade for everyone. So here is the market on Friday. Watching the trade, there is nothing wrong at this point with this market because this rules the day. You still have, if we look at this low from this right here, that low was 75.49. This break low was 75.50. So we have a pattern of a higher high and a lower low. We have that. But you'll hear me say over and over, the hierarchy is the slow stochastic rules the day. This is Thursday, this is Friday's trade. You haven't lost it. On Friday, you lose the embedded reading. You finished under 79. As far as I'm concerned, in the last 3 minutes, 4 minutes of trade, you're getting out of the market. Whatever it is, right at the very end, not intraday. You're observing, is it going to be able to stay down? If it does, call it a day. What now am I expecting? I am expecting price and the 18-day average to go to the price and the 18-day average to come together. The only way it won't, in my opinion, is if you surprise me and you re-embed on Monday, or Tuesday now. This would be Tuesday. This is Monday's trade with a day like today where the market gets back over 80. Then I got out too soon. I can live with that, okay? Living with it and watching it fall when the odds favored making a run at the key moving average or one of them, that I'm not going to stand for. Okay, this is today. The market drops down like that. All right. Didn't really close lower, folks, up 7 cents. But the work tells me that the odds favor the price and this 18-day average are going to make a run at each other, and I'm wrong in my thinking. You always have to have a spot you're wrong. Over the most recent high, which is right here at 77.17. I actually think the pros, I know you're going to think I'm crazy, are going to sell short, looking for that to happen. We'll see if I'm right or wrong. And I know where they're wrong. You have to have an out. The best laid plans have to have an out. If you don't, you're slaughtered. You can't play that game. Discipline. Risk control. All right, in the gold market, you got lower highs, lower lows. You're in a downtrend. You have divergence. You have momentum trying to point up. That's scary. If you should take out the highs of Monday at 169.89, you'd end up with a higher low and a higher high, calling for a challenge of the 18-day average, in my opinion. Let's assume the market just fails here. Not much I can do when momentum's pointing up, and how can I be short when I have a reading that's under 30? One of the things I teach in my charting course, when you're oversold, you're not a seller. Embedded is different than oversold. So as far as I'm concerned, interesting to look at, but that's it. Where do you think the failure was on this market? Here you come down to the Bollinger Band. Often you get oversold. What's the line in the sand I talk about? That 18-day average of closes. Markets often like to go to that number to figure out what to do next. Do they always do it? No. Do they do it many times? Oh yeah. Up, fighting a battle. Up, coming back to it. Down, going back, congesting right at that number. I can go on and on. Is it every time? Nothing's every time. Is it more times than not? Do your homework. You tell me. I know what I believe. Now, if it drops from here, this is the close, the Bollinger Band should be the support, but you've entered a downtrend. To turn the trend up, and yes, you've got to talk that. If you get over 34.35, that would take out the swing line high. That would put you at that point over that number, over the 18-day average. If you don't break through 32.54, you could end up with higher lows, higher highs over that number, and momentum's already trying to point up. It's already sticking its head out. That could be a sign the market wants to run back towards that 3,600 level. TLT, this market's like that Gorilla Glue trade. It's just locked in on that lower Bollinger Band, and until it leaves it, and you don't become a hero, until it's left it, it hasn't. This is an embedded reading. This is just super bearish. This is where traders are calling uncle. I'm wrong the market. I'm waiting for a bounce. It doesn't happen. I can't tell you that, you know, in the 60s, I signed up to become in this business, 1969 to be specific. And in the early 70s, I became a broker. Remember, I tell you, I've done everything wrong. I can remember, nothing goes straight. It's got to give you a reaction. I'm on the phone. I wish I had back my youth to know the things I know today. Because that's not how it works. You would think that, but it's not how it works always. FXE. This market's got what? Well, we've got here a higher high, a lower low. The battleground for a while has been the 18-day average, but you're already overbought. Do I think you're going to attract a lot of new buying? Not unless you embed. So without it, I'm not trending, just coming up. I'd be very cautious about that. You know, you might have ideas about trading when you wake up in the morning, and if you do, you might want to tune into what I do. Now, in the morning, I used to do these in the afternoon. I now do them at, I start recording at 8:40, and on a good day, it's posted around 9:20 Central Time, Chicago. I'm reviewing all the markets, talking to you about what I'm seeing in them and where you go. Where do you buy? Where do you sell? The difference is because this is a paid subscriber service, unlike what I do here, I can say, I want you to buy here. I want you to sell here. This is where your stop is. This is what I think you do. That's what you're paying me to do. On a free service that you have here, I do my darn best to give you an idea of the broad swath of the market, but I'm never going to tell you, I think you should buy and I think you should sell. Just not going to do it. I'm not going to be your broker here, but I will be an advisor to you in my videos. How do you try it? $8.95 for 30 days. 6 videos a week. 5 Monday through Friday morning. A weekend video where I do the longer term charts, and I do mix the longer term weekly charts with the daily charts during the week, and I'll flip them the other way on the weekend. And as you already know, I'm always adding new services for this. Give it a try. At the very least, you don't want to do that? Hit the like button for the video. Let people know if you like me or you hate me. I'm Ira Epstein. You can get the service by going to our website under the word research. You can call my staff. They'll take care of you, and you're committing to nothing. $8.95. That's it. I'm Ira. Have a good day.